Happy St. Patrick's Day, everyone. And with March 17th comes another market update. However, I'm going to change a couple things around. I want to do this real quick because I want to get to Bitcoin. And I want to show you several different charts in Bitcoin that correlate with the markets. Not only Bitcoin, but with the markets, tech stocks in general. So here we go. S&P has made both its year-to-date high and its year-to-date low in the last 30 days. That's the first thing I see. We got a high up here just above 610, which occurred, let's say near the end of February, mid to end of February. Year-to-date low occurred just last week, middle of March. So mid-February to mid-March, we've seen a big blowout, and we've seen quite a drop in the S&P from one extreme to the other. Where does it go from here? At the very least, greed and fear index is screaming by. You've got also, just when you look at things like, I was looking at the last time the markets had a double-digit pullback. This is number 5 in how quick double-digit pullbacks have happened. And we're talking about using data that goes back 100 years. So, last time, like in the 50s, we had a drawdown. Obviously, 2008, something that we're more used to. That was a double-digit drawdown as well. COVID. But this one ranks in the top 5. Looking at bonds, our new target for bonds is, and TLT is 95. I mentioned this last week. I've been mentioning this since we drove out of the downtrend, which really we started pulling out of the downtrend in February. So bonds have been moving higher since the lows that were set in January, down at around 85. We've come up to and had a little bit of a pause right around 90. I expect the next leg will move up here. If it doesn't happen here soon, remember, there's always sell in May and go away, but I think it's going to happen before then. I think this is going to happen here in the next 4 to 6 weeks. We'll be trading at 95. This is actually good for the stock market because if the bonds move higher, that means that the idea of interest rates going higher is becoming less and less. All right, so definitely want to keep a look at that. USO, I've been talking about for a while now that we're seeing higher lows and higher highs. This is a small pattern inside of a multi-month pattern that takes us into July, where we expect West Texas Intermediate crude and all things crude and energy to be higher between now and mid-July. So we've got March, April, May, June. This pattern is still 4 months. Still 4 months. This is a 5-month pattern, and we're 20% into that pattern right now. Gold, been telling you we were going to hit all-time highs, and we did. Right? Late last week, we jumped above the highs in February. As you can see here, those highs in February in the low 270s. We're now trading above 275. And so where do we go from here? We're in an area right now where institutions are buying GLD. This is an institutional buy now. 285 would be that 38% extension off of the lows to highs that have happened since mid-December. That's what I picked, anywhere between 280 and 290. And so gold, continuing to move. All-time highs, gold itself above $3,000 an ounce. Let's turn to Bitcoin for the rest of this particular session. And so you can see here that I'm taking those September lows that go all the way back to the beginning of September, and I've drawn a line through the bottom. And we can see what's something, we see an area called rising support. Now, I could have drawn this line anywhere. I could have drawn it off the October lows. I could have drawn it right off of the November election, and that would have pushed it slightly down, probably above the $90,000 area. What I'm showing you is a longer-term projection for this particular asset, where we're going to be on the low side between 90 and 100,000, depending on where you draw these lines. The higher side shows us back to around 125, which was my first area of support or resistance coming into the new year. You got 3 areas here. You got your support rising, you got your resistance rising, and then you got the Elliott wave, the contrarian traders that are saying this thing's likely to go up above 120 and maybe even into the 130s between now and September. Couple of confirmations on this. First, RSI. So RSI tends to converge. All right, we tend to see, some divergence between price and RSI happen in October before we've had that next big move up from around below 60,000 up to above 100. More recently, if you take a look at the month of the end of February and then again here around where we were just a week ago, lower lows but higher lows on RSI. Is this a signal that's telling us that it might be time for the bulls to really take a good look at BTC? The answer is, if you're a technical analyst and you use RSI and you're looking at that oscillator price divergence, then your answer is clear. Also, what we took a look at was Nvidia and how Bitcoin and Nvidia have been correlating together. Now, this chart you see here, the candles are Bitcoin. The line that is solid is Nvidia. Keep in mind, Bitcoin trades 24/7. Nvidia only trades 24/5 roughly. All right, Saturday and Sunday, Nvidia does not trade. That's why you see gaps in the price. But we've seen Bitcoin and Nvidia strongly correlate each other. Nvidia is back above the deep seep problems that it had. So it's come out of that area where we dropped in 2025. It came right back. Meme traders have exited this one for the most part, right? And I even know a couple meme traders that eventually got spooked out of Nvidia, and now Nvidia looks to a lot of the scares behind them. And so what's good for Nvidia is also good for Bitcoin. The other thing is that we got chip prices. They're set to rise, with all the leading chip manufacturers. This is tariff related. And so again, if those prices rise, that demand is still there, folks. That demand is still there. If anything, it's because of AI, and that will cause revenues to rise with companies like Nvidia, and it should cause Bitcoin to rise with it as well. Natural gas. You got institutional buying on natural gas. Did you know nat gas has almost doubled in value since November's election, when it was trading below $12.50? It ran up to just below 25, and before pulling back. This is UNG, the natural gas ETF. Now, I got to tell you, I don't like ETFs like this because there's a lot of contango spreads on this, but it has definitely moved against the grain since the election has nearly doubled. This is a power play, meaning that power is a demand based to a lot of on AI consumption, not only today, but tomorrow. And then finally, is it time to start looking at Bitcoin because of seasonals? The seasonal you see here in front of you is the seasonal that starts in April. So yes, we are roughly still in mid-March, but I'm setting you up here. To show you. Last week, we had Bitcoin seasonal bear that finished. And I said last week that it might be a week or two before we start to see some bullish opportunities. So I went and ran the money calendar out, and this is where it picked it up, April 2nd. Right, April 2nd, and the entire month of April for the last 5 years, looking at 4 of the last 5 years where we have been bullish on that to the tune of an average of 15% for April. So there you go. When you add all this up, it looks like this. Do we have a big bounce coming? Perhaps. All right, that's the first thing I want to look at. The VIX is cooling off. Markets are finally feel like that all that delevering has happened. We're finally ready to move higher. You got commodities like gold, you got commodities like energy. I love things. And these things are breaking out for 2025. What's good for these things is also good for the stock market overall. The one or two things that we need to look at coming into this week. Got a Fed meeting that's happening. So we're on Fed watch for Wednesday. And of course, this is triple witching week. All right. So triple witching is when we have futures and options for the month and the quarter all expiring come the end of this week. So this is something we definitely want to keep an eye on.